Happy Tuesday, everybody. Today, we're going to go over the W trade model. I'm just going to expand more about it. Some people have been asking me more questions. But essentially, for those who aren't sure what the W trade model is, I'll put the original video in the description, and it's also in the playlist for some of my setups. So the W trade model, I'll show you guys just visually first, and then I'll go to live examples on the chart since they're going to come in different shapes and forms and sizes. So for the W trade model, essentially what we're going to be looking for is a big drop to happen. We're going to slightly retrace back up, and then we're going to head back down. However, instead of the market structure staying bearish and we break this low, like break this low over here. What we're going to be doing instead is we're going to be watching for market structure shift to occur. So instead of being continuing bearish, we're instead going to make a higher low, and then we're going to take the first reversal back up using the strat. So the idea of the setup is we're going to catch the first reversal where the structure shift is changing. Because for traditionally for double bottom setups, you may know this also as a double bottom. Those individuals would get in once price closes above the neckline, which would be here. But we're getting in a little earlier down here on the reversal, which I personally prefer. So you'll also sometimes see versions like this. It'll break the low and then reverse back up. These I consider dirty W's. I do not take the reversal unless it's an outside bar or 3 bar or even a hammer to the upside. But otherwise, strat-wise, I'm going to be using any strat setup to get in the reversal when the higher low is formed. So let's look at some examples from today. I'll go over one that I took and another one and some others that I saw. So let's go on ES. Let's go on the 5-minute. So let me reverse this so we can see a cleaner one. So here we have the one that I took for ES. I got in on this 212 bullish reversal to the upside. Stop loss was under this level right here. So one tick below, which would have been 50. Oh, whoops. Apparently, I can't choose 50. Or, whoops. Actually, never mind. I did have it right the first time. Anyway, so for the W trade model, what I'm looking for is once this reversal occurs, this 212 up, I'm placing a buy stop order 1 tick above the candle that I'm looking to take the reversal on. You never want to put your buy stop order right at the level because something like this might happen. If you look at both these bars, this 2 and this 1, if we look up here, where the high and low is, we can see that the high of the 2 and the high of the 1 are the exact same price. So if I had a buy stop order at the top of this candle, the order is going to fill, but it's not even going to trigger me into the trade. So you always want to make sure that when you're doing this, you have your buy stop order at least 1 tick above what the actual price is to confirm that we're actually getting the break. For those who trade micros and you're looking at the mini chart, be mindful that sometimes the mini chart is a little off. So the micro chart might be off by a tick or two. So for ES, the top of this is 6753.25. The top of this candle on MES might be 1 tick above. So you sometimes, like when I'm trading YM or MYM, I need to do it 2 ticks above what it actually is because it'll trigger on the on the micro, but it won't trigger on the mini. So got to be mindful of that. All right, let's continue. So when we get into this trade, let me bring this back up. The first target, we're always going to be using the center area as our first target. You could use your discretion for this where you want to take profit. So we got a trim area here. And then my second level would be somewhere here, right? Or whoops, this was higher. So this right here would be how the trade would look like for me. So as soon as we trigger up, you can take profit either at the first body in the center or the wick. If there's a lot of wicks and selling pressure, I'm usually going to be aiming for the body first. And then I'll aim for the next level, whatever that may be. Now, the second area when the W completes, it's up to somebody's discretion because technically, right, I would consider the left leg starting from up here, while somebody may consider maybe starting down here, right? So always your personal discretion on where you want to start trimming your second target area. I just prefer to do it when the leg kind of begins and go from there. But again, this is personal preference. You can even start like do something like this if you wanted, right? Again, it's up to you. Now, generally, if it's a proper W, we're going to reverse at near low of day, and then we're going to reverse all the way back to try to take out high of day all the way up here. I haven't seen this happen in a while, maybe 2, 3 months. I think the algorithm changed a little bit. I haven't been getting proper follow through for the W's where we continue heading all the way up and make new high of day. To give you guys a simple way to spot this, just use these simple parameters. So we make a low of day or LOD from market open. We retrace back up. And we come down and reverse off a after a higher low or HL. And then number 4 is literally just getting into the trade. So going one step at a time. Step 1, move down from market open. Step 2, we retrace back up to make that little H hump. Step 3, we come back down, make a higher low. This specific version, it's equal to this low down here, but usually price will be a little higher, and I'll show you an example on gold today. And then we're pretty much getting in as soon as the first reversal happens. Remember, if it breaks this low, that is considered a dirty W for me. At least that's what I've nicknamed it. You can call it whatever you want. And I'm not going to take any strat setup to get into it. I'm going to be looking for either a 3-bar or outside bar to show me that buyers are really strong right now, or a hammer reversal to the upside. Cool. So I usually take this setup in and of itself. Like I don't really need anything else to get me into the trade. However, there may be other things that we can use to give us more confluence, right? So let's just say as an example, we have these liquidity points under these 1-hour levels, right? We have one over here. We have another one over here, so on and so forth, right? This would be sell side. Let's go back to the 5 minute. So we can see that when we dip down here in this area, we're pretty much in a liquidity area for orders to start getting bought up to take to reverse price, right? This is not a requirement for me. However, for some of you who may use ICT concepts, this might be a requirement for you. To me, this is just an icing on the top. I don't need it. It's just nice if it is there. Some other things to note as well. The anatomy of the candles, right? We kind of see like a lot of wicks here, like a big doji. This is relatively clean to me. We do have some wick action over here, which I don't really prefer, but still acceptable for me. Let me bring up the gold chart so we can see side by side real quick on an example of gold. Not the cleanest version on gold today, because again, I want the move down from market open to happen over here, right? I don't want price to open up and then, we come up and then we drop down. I really just want a clean move down or, whatever that may be. Excuse me. From market open. I don't want to see any choppy action. I don't want to see any bullish action and then we come down and do the W, which is still valid. I just don't prefer that version, but some of my students take it. So over here on gold, pretty much what we got. We have that move down. We got the retracement. We got the move back down with the higher low. And then we take that first bullish reversal to the upside. So my stop loss, I usually have it under the right leg over here. You can put the stop loss down here. I just don't prefer that because if price goes triggers me in, it should not be reversing at all until it hits at least target one, right? Which is over here in the center. So in this example, target one. Can I replay this? Oh, I guess not. And then again, target two, just use your discretion, whatever that may be for you. So in this case, as soon as you get in, trim some off. Once I trim some of my position, I'm moving my stop loss for the rest of my contracts to slightly above break even. Usually for YM, I'll do it about 5 ticks above my entry. For ES, I'll do it a point or two, depending on volatility. For gold, I'll usually do a point or two from my entry for the rest of my position. And then I'll start trailing each 5 minute closed candle. So for example, in this case for gold, after I take some off at the first target, about 7 points or so, I'm going to move my stop to 1 point in profit for the remainder of my position. And then I'm going to start trailing every closed 5 minute candle. So in this case, my second position would have gotten stopped out at about 7 points. It did continue heading higher and hit target two, but if it's going to be a valid, or let me not say a valid, but if it's going to be a true W in the versions that I'm used to when it fully pans out, we should just continue doing two up, two up, two up. We shouldn't be getting any reversal at all until the W completes, and then it'll pull back. However, as I mentioned, the algorithm has switched up, and here we are. So we make the best that we can. Cool. Let's move on. For those who trade options or regular stock, again, this is a universal setup. You can see it print on regular stocks. You know, if people trade Forex, same thing for you guys. Crypto, even though I've never taken this trade on crypto. I don't actively day trade crypto like that. One thing that I forgot to mention as well, time frames to look for the setup. So you can look for the setup on the 2-minute time frame, 5-minute time frame, 15-minute time frame, and basically anything above that. When I'm day trading, I'm really only looking at the 5 and 15 minutes. I have had some individuals tell me that they take it on the 2-minute. I just don't have the data to be comfortable enough to take it on the 2-minute, but I have seen that it works. My personal preference when I'm day trading is the 5 and 15 minute. Usually for the 5-minute, it's going to be setting up anywhere between 10 a.m. Eastern time and 12 noon Eastern time on the 5-minute and the 15-minute. Sometimes what I'll do if I don't see it print in the morning, I'll come back on around 1 p.m. Eastern and on the 15-minute. And if I see it setting up on the 15-minute, I'll stick around and take it. But that's pretty much the only two time frames that I really look for the setup when I'm day trading. But again, the 2-minute works. Um, 5-minute, pretty much any time frame works. You'll see it on any time frame. I've seen it on the 4 hour. I've seen it on the 1 hour. I've seen it on the daily time frame, on the weekly time frame. I've even seen it on a quarterly time frame. That's usually if I'm going to be swing trading stock or options. So something to keep in mind. Let's go to regular stock. So again, this is ES, which is the S&P 500 futures. Let me go to QQQ and show you guys that example. So this example here to me would have been a little better than ES or the S&P just because we had the proper higher low right over here, right? Where the one on ES that I showed you guys was evened out. So again, similar concept, move down, retracement, higher low, take that reversal to the upside. For those who trade options, it may be a little trickier because for futures, I can literally just put my setup on the chart and I could just call it a day. However, for options, if I were to take this on it, there's several things that I would do. I can either just buy market as soon as it breaks that. If I am fast enough, I can simply put a conditional order. So as soon as it breaks that price, it'll automatically buy calls for me. So in this case, first target was about 54, 70 cents away, depending which one you choose. It's completed. W to me would have been around 178 to about $2 and change. Towards the end of the day, 0 DTE, that could be a pretty decent move. But again, do what works best for you guys. Definitely paper trade it if you're used to it. One way that helped me visualize the setup for those who know the strat is to me, a W is just a failed bearish TTO or H pattern. So bearish TTO, we get a pullback and a bearish trend, and we pretty much keep on heading down bearish market structure, right? Or H pattern. Looks like the lowercase letter H. So if it's a bearish TTO, like this one, we have a nice H pattern right here, or bearish TTO, we can see that once price reversed to the downside, we just went two down, two down, two down, and completed that H. Price should not be reversing at all as the H is being completed. So to me, if price is coming down to complete the H, but then we're reversing, that's telling me that the sellers aren't really as strong anymore and buyers are stepping up, right? Because even here, this would have been an H if it completed, if it continued going two down on this bar as opposed to two up, right? So that's the idea behind the trade. We're getting in as soon as we can to catch the reversal to the upside, right? Again, just reiterating from the beginning, traditional double bottom traders would get in once price closes above this area, but we're getting in a little earlier and our risk reward is better. I'm not entirely sure where their risk is, but let's say they got in over here and their stop loss is there. Risk reward, it's almost 1-to-1, but with us getting in earlier, we have a much better risk reward with a tighter stop loss. Now, sometimes if the stop loss is pretty tight like this, I would use discretion and I would probably put my stop loss down here if it's not even that far away. Because I can take 66 cents of drawdown on an options trade. That's fine, right? So always use your discretion on what may work best for you and go from there. Let's see, anything else to mention to you guys? Let's see. Again, I'll mention this one more time. So again, what I prefer, move down from market open, we come up, come back down, we reverse. What I don't prefer is if we make a bullish move from market open, come back down, and then it does a W. While it is still valid, I don't prefer that. I prefer this because I want to get the absolute bottom reversal from low of day as close as I can. But again, this is still valid. You'll also see examples, like I mentioned, what I dubbed dirty W, like this. It breaks that low and then reverses. For those who trade ICT, you might know that as the ICT 2022 model, even though the entry is a little different. They use fibs to get in where we would not. Cool. Hopefully this was helpful. If you guys have any questions, definitely let me know in the comments. If you know me on Discord or anything like that, you're definitely welcome to message me there as well. If this was helpful, again, share it to anybody you think this might be beneficial for. Like, subscribe, and all that good stuff. And thank you guys for watching. I will see you for the next one.